Have you ever wondered what truly makes a financial giant tick? Beyond that iconic card maybe sitting in your wallet right now, what are the layers of business strategy and challenges that really shape a company like American Express?
Well, that's exactly what we're doing in this deep dive. We're pulling back the curtain on Amex's business segments, getting into their latest financial performance, trying to understand their approach to shareholder value, and sort of assessing where they might be headed next. And to guide us, we've got their own reports right here, specifically the 2024 Form 10K annual report. So this is fresh, pretty raw data, giving us, hopefully, an unfiltered look.
Yeah, and what's fascinating here, I think, is how they've managed to adapt over, basically 2 centuries. It's not just adapting, but consistently redefining what it means to be a premium financial and lifestyle company. They've done this through, shifting global landscapes, intense competition. We'll try to connect the dots from their old school privileges idea right up to their modern, complex financial stuff. It's quite a story of resilience. Okay, let's unpack this business then. When you think American Express, yeah, your mind probably goes straight to that little plastic rectangle, maybe gold, maybe platinum. But their operations are actually way more segmented and strategic than just the card itself. Their 10K report breaks it down neatly into 4 core operating segments. Each one plays a pretty crucial role. So, kicking things off, let's look at what most people probably picture first. U.S. Consumer Services, or USCS. This is where they handle their own consumer cards, plus all those travel and lifestyle services. But here's where it gets kind of interesting now. They've also moved into banking and non-card financing, things like business checking accounts, consumer rewards checking. And to really show that push into lifestyle, in 2024, they bought TikTok and Room. These are tech companies that power up their Resi dining platform. It's a clear signal they're moving beyond just payments, right? Getting into everyday experiences.
Exactly. It's about embedding themselves deeper into the customer's life, especially those high-value customers they target.
Then, building on that consumer side, we have commercial services, or CS. This segment focuses on the corporate and small business cards here in the U.S. But again, it's not just about the card. They offer payment and expense management solutions, non-card financing too. It's really about backing businesses, big and small. It covers a wide spectrum.
And what's fascinating there is the different value they offer. For big companies, it's about efficiency control. For small businesses, it's often about getting the capital and tools they need to actually grow. So that diversity within commercial shows they really understand different business needs. They can tailor things quite specifically.
Good point. Okay, next up, segment 3 is International Card Services. ICS. Pretty straightforward. This is basically the international version of USCS, issuing cards, offering services around the globe. They also manage a pretty complex web of international joint ventures and loyalty programs. So extending that Amex reach way beyond the U.S., adapting the premium feel for different places.
Yeah, localization becomes key there.
And finally, we get to Global Merchant and Network Services, GMNS. You could argue this is the absolute backbone. It's all about merchant acceptance, where you can actually use the card. This segment is focused on growing that network. And in 2024, they hit approximately 108 million merchant locations worldwide. That's a huge jump from where they were decades ago. Shows a relentless focus.
Absolutely. And if we connect all these segments back to the bigger picture, their unique spend-centric model is just fundamental to everything. It's not only about making money from loans, although that's definitely a growing piece of the pie now, as you mentioned with the banking side, but their main focus is driving high-spending card members, because that higher average spend per card, that offers better value to merchants. Think loyal customers, bigger transaction sizes, and that in turn attracts more partners, which then lets Amex invest in even richer rewards for the cardholders.
Right, it creates that cycle.
Exactly, that virtuous cycle. And that's what really sets them apart from, say, pure payment networks like Visa or MasterCard.
That does sound like a powerful model, but also maybe a bit delicate. Like, what's the biggest challenge in keeping that spend-centric thing going, especially now with, lower fee options, digital wallets popping up everywhere?
You've hit on a key tension there. The challenge is always demonstrating that the premium value, the rewards, the service, the network is worth what might be a higher merchant discount rate compared to competitors. They tackle this by really zeroing in on those high-spending customers who bring, frankly, more valuable transactions to the merchants. That justifies the cost. It's really about the quality of the spending, not just the sheer number of swipes.
That makes sense. Quality over quantity. And looking back, their history is just full of these kinds of strategic moves and resilience. Well, if you think about it, starting with a paper card, then coining membership has its privileges, launching the Centurion card, the Black Card, which still gets talked about today, and then that huge shift in the mid-90s. They really started embracing partnerships, like the co-brands with Hilton and Delta, who are still massive partners. Plus, pushing hard to get accepted in everyday spots, grocery stores, gas stations, moving beyond just T&E.
Right, making the card more utilitarian.
Exactly. And to grow that merchant network globally, they made another pretty bold move in '96, letting other banks issue Amex cards on their network. That was the start of their Global Network Services, GNS.
That was key for scaling internationally without having to build everything themselves.
Yeah, a huge enabler. And it's not just expansion where they've shown agility. They've been incredibly resilient during tough economic times, too, even reshaping their whole structure. Like after the Great Recession, that massive decision to become a bank holding company, that gave them better access to funding.
Crucially, yes, better access to liquidity and stability.
And a huge result of that was launching their retail deposit program, which, as you said, has totally transformed their funding. Now, over 70% comes from customer deposits.
Yeah, pivotal shift.
And then, remember, 2010, Small Business Saturday, started as a campaign to help struggling small businesses after the recession.
Yeah, brilliant marketing, but also genuinely helpful.
Totally. And it evolved into this global shop small movement. They report over $223 billion in consumer spending generated through that. Just incredible brand power. And even during COVID in 2020, they committed to no pandemic layoffs that year, offered financial relief, gave free hotel rooms to first responders, really leaned into that powerful backing idea. So the payoff for this long-term focus seems clear. Since 2019, millions of new premium customers, they've more than doubled global merchant locations, revenues grown significantly, and get this, Millennial and Gen Z customers. They're now their fastest growing consumer group. So this isn't just your parents' Amex anymore, it's actually connecting with younger generations.
Which is vital for long-term health.
Yeah.
But it also raises the big question. In this super dynamic payments world, how do they handle the competition? It's not just the Visas and MasterCards who are up and bigger and have that massive network scale. It's also all the new tech web, mobile payment platforms, point-of-sale lenders, the whole buy now, pay later explosion.
Well, lots of disruptors.
Exactly. So they constantly have to differentiate, offer something compelling. And then there's this other thing looming. Open banking.
Yes, open banking. Explain that potential threat a bit more.
Well, these initiatives, which are gaining steam globally, could potentially disintermediate them, meaning customers might be able to connect directly with financial services or other businesses, sort of bypassing the integrated Amex platform.
Cutting out the middleman, essentially.
Precisely, which could threaten their whole integrated model. So that's a significant strategic risk they absolutely have to navigate proactively.
Okay, so lots of strategic stuff happening. Let's switch gears and talk hard numbers. The 2024 financials look, well, pretty strong on the surface, but it's digging into what drives those numbers that tells the real story. Looking at their consolidated results for 2024 versus 2023.
Yeah, quite impressive. Total revenues, net of interest expense, grew 9% to almost $66 billion. Net income jumped even more, up 21% to $10.1 billion. And for shareholders listening, diluted earnings per common share, up 25% to $14.01.
Wow, solid growth. Yeah, and their return on average, equity, ROE, a key measure of profitability, was really robust, 34.6%. Now, we should mention there was a $531 million gain from selling off Certify Inc. That helped those numbers.
Sure, a one-off boost.
But even without that, the underlying business performance was clearly strong.
Right. And if we break down those revenue drivers, you really see the why. Take discount revenue, that's what merchants pay them. It was up 5%, mainly because billed business, so total spending on their cards, was up 6%. That shows the core model is clicking. More spending equals more revenue. Pretty straightforward.
Okay.
Then net card fees, up a really impressive 16%. That's mostly from growth in their premium cards, the platinums, the golds, etc. It really highlights how well their strategy of enhancing those premium products is working. People are willing to pay the fees for the value they get.
So the premium focus is paying off directly in fees.
Absolutely. And then there's net interest income. That was up significantly too, 18%, hitting $15.5 billion, mostly driven by more people carrying revolving balances on their cards, plus higher interest rates overall. And that 18% jump really hammers home the impact of becoming a bank holding company. Their funding model isn't just stable now, it's a major profit driver. It sort of shifts their identity, doesn't it? From mainly payments to more of a hybrid financial institution.
That's a really interesting perspective. The banking side is becoming much more central to the bottom line.
Definitely. And finally, service fees and other revenue grew about 2%, smaller piece, but influenced by things like foreign exchange fees from people spending overseas and fees from their loyalty programs. So nice diversified income streams there too.
Okay, so revenues look strong across the board. What about the other side? Expenses and credit. Well, total expenses were up 6%, reaching $47.8 billion. The big chunks there were card member rewards, got to pay for those points and perks, plus business development and marketing.
The cost of acquiring and keeping those high-value customers.
Exactly. It's a balance, isn't it?
Yeah.
You have to spend to maintain that premium value proposition. And on the credit side, provisions for credit losses increased by 5%.
Okay, so setting aside a bit more for potential bad loans.
Right. They said it was mainly due to higher actual net write-offs, which you'd expect as loan balances grow. But it was partly offset because they didn't build up their reserves quite as much this year compared to last.
Which suggests maybe they feel the overall credit quality of the portfolio is still pretty good, even with the growth.
Seems like it. A lower reserve build kind of implies they're not anticipating a huge wave of new defaults relative to the portfolio size. So credit performance still looks solid overall, despite the increase in provisions.
Got it. And connecting this back to the funding, that shift to retail deposits we talked about is just huge. Over 70% of total funding now. That decision post-Great Recession looks incredibly smart in hindsight, gave them stability, lower funding costs potentially. Looking at the balance sheet snapshot, card member loans and receivables averaged about $131 billion in 2024. That's a lot of lending. But customer deposits hit nearly $140 billion. So a really strong, stable funding base there. Long-term debt was around $50 billion. Seems manageable.
And the cash flow story.
Pretty healthy. Operating activities generated $14 billion in cash in 2024. That's your core business humming along. Investing activities used cash, about $24 billion, mostly because they grew those card member loans and made those acquisitions like TikTok and Room. So investing in growth. And financing activities brought in about $4.4 billion. That came mainly from taking in more customer deposits and issuing some debt, but they also spent a good chunk on buying back shares and paying dividends. So funding growth, but also returning cash to shareholders.
Okay, that leads us nicely into the next bit. What does this all mean for you, the shareholder, or even just someone watching the financial world? Company health isn't just profits, right? It's also about how they return value and plan for what's next. And Amex seems pretty clear on shareholder value. In 2024, they bought back 24 million shares of their stock, costing them almost $6 billion.
That's significant. Reduces the share count, boosts earnings per share.
Exactly. And the board has okayed buying back up to 120 million shares total, so big ongoing commitment there. Plus, they kept paying dividends. Almost $2 billion went out in dividends in 2024, including payments on preferred shares.
So clear capital return strategy. But their decisions on how much to return, how much to reinvest, that's always tied into performance, market conditions, and importantly, regulations.
Ah, yes. Regulations. That
Yeah.
seems like a really big factor now.
It really is. And what's fascinating, or maybe challenging for them, is how the regulatory landscape keeps getting stricter. You mentioned they became a Category 3 firm in 2024 because their assets crossed $250 billion.
Right. What does that actually mean for them day to day?
It means heightened requirements, more capital they have to hold, stricter liquidity rules, more intense oversight. Basically, bigger banks face tougher rules. And it raises that question. How do you balance growth and shareholder returns with these increasing regulatory demands? It's a constant tightrope walk.
Are there specific regulatory pressures they're facing right now?
Oh, yeah. There's ongoing scrutiny on credit card rewards programs. Generally, regulators are asking questions about fairness and complexity, which could eventually impact that core value proposition. Then there's the CFPB's proposed rule to slash credit card late fees, maybe down to $8. It's currently held up in court, but it shows where regulators are focusing consumer protection, fee reduction.
That could be a big hit if it goes through.
Potentially, yes. Plus, new rules are coming for reporting small business credit data, which adds complexity and cost on the compliance side. And they're still dealing with some antitrust legal challenges around their merchant rules, the ones that say merchants can't steer customers to cheaper cards. Oh, and they mentioned voluntarily reporting and fixing a minor issue with Iran sanctions involving a third-party ATM network and just a few accounts in 2024. It highlights just how complex global compliance is. Even minor things can pop up.
Seems like a minefield sometimes. On a more positive note, though, they obviously invest heavily in managing all these risks, right? Credit risk, operational risk?
Absolutely. Cybersecurity is a huge one they mentioned, constantly investing to defend against threats. That's something pretty much every modern business can relate to. They have dedicated teams just focused on risk management across the board, trying to stay ahead, not just react.
So wrapping this all up, what's the overall assessment looking forward?
While their 2024 performance definitely shows strong momentum, the earnings power of that integrated spend-centric model is clear. Now, they do acknowledge uncertainties, geopolitical stuff, the macroeconomy, plus the regulatory and competitive pressures we've talked about. But they seem very committed to their existing strategy, focused on premium customers, expanding the network, and investing in value. They appear to be in a strong position, fundamentally, but the key word, I think, is adapting. They have to keep evolving, keep tweaking the model, keep responding to stay ahead. It's crucial for a company with their history and scale.
That brings us to a final thought, maybe something for you to chew on. Given Amex's long history of adapting from paper cards to digital platforms, attracting millennials and Gen Z now, do you think their powerful backing approach is enough to keep thriving in this really fragmented, digital-first financial world? Or will these mounting regulatory pressures and all the new, nimble competitors force an even more radical transformation down the line? Something maybe even they haven't planned for yet. So just to quickly recap our deep dive today, we looked at American Express's different business arms, saw their strong 2024 financials driven by that unique spend-centric model, discussed their clear plans for shareholder value, and touched on the really complex regulatory and competitive world they operate in. It's quite a picture.
Yeah, and understanding a company like Amex, it isn't just about the numbers in the 10K. It's really about seeing how a business tries to balance its heritage with the need for constant innovation, how it manages global reach with local needs, and balances profit with, well, purpose and compliance. It's a continuous story of adaptation, really. Offers lessons for almost any business, I think.
So what stood out to you in this deep dive? Was there anything particularly surprising or relevant to how you see the financial world? We always love hearing those aha moments. Thanks for joining us on the deep dive. We'll be back next time to uncover another fascinating story hidden in the details.